The price of natural gas has continued to push higher. Just in the last 24 hours, we've seen it trade up to its best levels again since December 2018. So can we expect more strength into the summer, or actually is that trend about to start running out of steam? Just to put the move for natural gas in perspective, this is where we are. So it's gone from the April lows, so just under 4 months ago, of around 250, trading at the moment above 4, which puts it back at levels not seen since about the second week of December 2018. Clearly a lot of volatility towards the end of 2018. And I just wondered if we'd see this trend continue. Here's the move since April. You can see we've got this succession of higher highs, higher lows. So as usual in this video, I'll talk a bit about what's been driving the price, the levels to watch out for. Then we'll come back and look at things in a bit more detail and see if there's a trading opportunity here. We do have a trade running on natural gas at the moment. It's done fantastically well. The risk was £250, so we're up almost 6 times the risk on that trade from the beginning of June, buying 1700 at 303. The price is 404 at the moment, so just under £1,250 profit on that trade. So as usual, when I come back, we'll look at whether we should add to that position. Should we think about selling out? We'll take a look at things in a lot more detail. Hello, I'm David Jones from Capital.com, and I thought we would do an update on natural gas. You can see how much the price has moved in recent weeks, moving out to best levels since 2018. So I thought let's take a calm, cool look at it and see, is there more upside to come from where we are, or actually should now we start to worry that this trend is going to start running out of steam. So as usual, I'll talk a bit about some of the recent news around natural gas, some of the levels to watch, then we'll jump back onto the platform, take a look at things in a bit more detail and see where the opportunities might be, if there's another trade to add in here. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different content during the week. And of course, every Friday at 2:30 UK time, I now run these live streams direct from our YouTube channel. If you're subscribed with the alarm bell notification clicked, you get a notification off YouTube just as we're about to go live. Right, let's get into it and take a look at natural gas in a bit more detail. So last year was a volatile year for natural gas. It hit its worst levels since 2016, during 2020. And then by October of last year, it had traded up to an 18-month plus high. We have seen this volatility continue into this year. Just at the time of recording, over the last 24, 48 hours or so, we're seeing the price of natural gas trading back to its best levels since December 2018. So we are, 2.5 year plus highs for the price of natural gas. During the last month, we did see, we picked up on it on the last video about an imbalance potentially between supply and demand. European inventories of natural gas had fallen to their lowest levels in more than a decade. So that was something that perhaps would help keep the price supported. And in recent days, the expectation is for the hottest weather of the summer to hit the US, pushing up demand to power air conditioners and everything else. So I think that's something that's helped give it a boost in the short term. And already people are talking about a potential shortage of supply for natural gas in the winter. So there's lots of positive news at the moment that's helping to keep this trend going strong. But given the fact the market has moved, it's about 15% now, 15% higher in under the last 2 weeks. Is it all getting a bit overhyped and overstretched? We'll take a look at the chart in a minute and take a look at things in a bit more detail. First of all, let's talk about the levels to watch. So for me, the immediate short-term level, $4.16, that 2.5 year high hit more recently. After that, if we're going to be really ambitious, we could look at, I think it's the 9th of December high coming in ahead of $4.60, that sort of area. On the downside, lots of support left on the way up. We might use these as a trading idea. The most immediate of these for me are around $3.85, the 22nd of July lows. But as usual, to put some color on these numbers, let's jump on the chart and take a look at things in a bit more detail. So just as a reminder, this is where we are. This is the daily chart, and you can see we've pushed back into that zone from late December 2018. But what I want to focus on, as usual, it is the trend really that we've seen if we go back and pick up from perhaps those October 2020 highs. So during June, we had the breakout through those highs. Those highs came in around 343. The price has continued to move higher. We can pick up on a trend from the April lows. And that looks something like this. I think this trend line's done a great job of supporting any weakness at the moment. That trend line's coming in around 345, that sort of area. So, 15% lower than where we are now. We'll take a look at this trend in a bit more detail when it comes to planning the trade. But if we have a look at the RSI, we do have, I think, what's going on at the moment. It is arguably bearish divergence on the RSI, where the market has been moving higher, but the RSI has been setting lower highs. So it can be a suggestion that perhaps the trend we're following is running out of steam. So I think that is one thing that we just need to be a little bit aware of at these levels. But overall, that trend is still intact. Even if we saw a drop back towards these lows from the middle of July, ahead of sort of 350, that trend is definitely still up. We've still got plenty of support down at these levels. So for me, perhaps the better trade here, we have that existing trade running. Perhaps the better trade is to wait for a pullback. But let's flip things over to an hourly chart. So here are the hourlies. We've got a shorter term trend where the trend's accelerated from mid-July. At the time of recording, it's sitting pretty much on that trend line. We've got old highs coming in around 380. So that's an idea for an area to think about perhaps having a stop loss. So what I'm going to do, perhaps we'll see after some of the extreme moves of the last 24, 48 hours, perhaps we will see something of a pullback here, perhaps a probe below 4. So what I'd like to do when it comes to a trade is set up an order to buy on any weakness. And when it comes to a stop loss, I'm going to go the other side of these old highs just from the end of June. So I'm going to go, let's say 370 on a stop, and I'm going to leave an order in to buy at 395, just in case the price gets knocked back to only where it was at the end of last week. Don't forget, I think it's important to have some perspective here. Let's set that order up, then come back and look at things in more detail. So I'm going to set my order up now. So I'm going to be a buyer at 395 if it dips back to where it was on the 23rd of July. And I'm going to put my stop loss about 25 away, down at 370. And that's for the normal risk of around £250. Let's send that trade through. Then we'll take a look at this chart in a bit more detail. So the order's placed, buying 1375 of natural gas at 395. We'll see if that gets filled over the next couple of days. But for me, even if it does get knocked back, we've got on the daily charts, on the bigger time frame charts, lots of support coming in around about 350. So we'll see if these levels hold, or if we just see the price continue to push higher. At the time of recording, it is incredibly strong, but it is perhaps a little bit overstretched in the short term. But I'd be interested to see if we do have something of a pullback here and a chance to add to that position. That's it for the update in natural gas. We'll see if this trend can continue over the next few weeks. We'll come back to it and see how things are trading then. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.